have a correction ahead. Hello everyone, this is Ahmed Saleh and this is a weekly market recap, and this is what we will discuss in this video. And now let's go to the key messages. So last week we have talked about 4 watch out, and they actually materialized. The market went down last week, but we are still holding above the 50-day moving average. We had a good reversal on Friday, so it's very important to watch out this to see if the market will reverse and go up next week. We had major losses in some stocks, and now the bears are in control. And now to the details. So last week we went down by 1.6% in the S&P, 3% in the Nasdaq. This is quite major, especially that we talked last time about November is normally the best month in the year. So it was a surprise for a lot of investors, but it wasn't a surprise for us, because if you look at the last week video, you will see that we have warned about that. We have mentioned 4 watch outs, and we are going to review these watch out in this video. So the market is correcting now. The government shutdown is now the longest in history, 36 days. There were some news on Friday that there is a deal that is being cooked, but it didn't materialize. Let's see if this will materialize next week. If this materialized, I think it will be a good news for the market, because I think it's affecting the overall atmosphere. So if we get this solved behind our back, then we might get a boost for the market. We had some major losses in some stocks like ACHR. We had -25 and SMR -30%, QBT is -18. We had lots of stocks that were going up in the last period that had very big correction last week. So now let's look at the watch out that we have talked about last week and see if they are changing this week or not. Last week we talked about that in the S&P 500 we have 4 days of red candle, and we continued this trend last week and the market was going down. But on Friday you can see that we have a reversal candle. This is what we called a green hammer, and it's normally indicate that we had a reversal. So the market went down, it tried to break below the moving average 50, it couldn't close below it, and then started to rally up, maybe because of the news on the government shutdown, we don't know. But the end result is that the market closed at the highest point, and this implies that we might have a gap up on Monday. So let's see if this will materialize or not, but it's a good reversal candle that we had, especially that we are staying above the 50 days moving average. We talked last time about the equal weight. The equal weight is performing very well. It went down by only 0.2%, while the full market went down by 1.6%. It's outperforming the capital weight index, and that's mainly because the reduction last week was happening in the Mag 7 and in the big companies. So let's review these big companies to see what's happening. So Nvidia went down by -7.3%, but on Friday we had this hammer, so it's a good reversal candle. The stock tried to close down below the 50 days moving average, it couldn't, and there were some buyers on the market that pushed the stock up, and it even closed in green. Very good reversal, and with a good volume as well. The next one was Tesla going down by 6.1%. And this one is still holding above the 50 days moving average. If it closes below that, it will be a bad sign for the stock. Next one is the Microsoft, -4.1%, and we have what we call a star, a big star. So it means that the decline that we have seen last week had stopped. Maybe it will stop for some time, maybe it will continue. We need to see that next week. Next one was Facebook. Facebook has an excellent reversal candle. You can see here that the body of the candle, the green body, is bigger than what we have seen in the previous example, and it indicates a reversal on this stock. I would always take the lowest point of Friday as my exit point if I am still in the stock, because it will mean very bad if we close below the low of Friday. Next one is Google. Google is hardly correcting, and that's mainly because of the good result it had, and it is still continuing above the 21 days moving average and above the 50, so it's doing very well. Hardly any correction you can see over there. As well as Apple, hardly any correction. It is holding very well. There's no correction at all. So you can see that we had a split picture in the Mag 7. Some of them went down, some of them were stable, but the overall theme is that there is a reversal that happened on Friday. We should not discount this. This reversal might continue, might not continue, we don't know. We have to see what will happen next week, but closing below Friday's low is very bad point. You need to go out if you are not. And if we opened with a gap up on Monday and we continue to go up, then it is a good news for the market. I think we can initiate some position at that point of time. Amazon also had a good reversal, same as what we talked before. Now we have some watch out on the new high, new low, and the breadth that you need to be aware of. So 2 weeks ago we had 59 companies achieving new low. Last week we had 247, and this week we had 454 achieving new low. And you can see the number of the new highs is reducing. So 225, 2116, 2106. This is not a good sign. We have also seen that the breadth of the market is decreasing. So the number of companies below the moving average 50 was only 48%. It increased to 58%, and then it increased to 64%. This is not a good sign. This is not a good sign. So the number of the companies below the 50 days moving average is increasing. The number of the companies above the 50 days moving average is decreasing. This is not a good sign. The same is happening for the number of companies below the moving average 200. So it moved up from 43% to 47% to 51%. And this is the first time that we have the companies below the moving average 200 is more than 50%. It's not a good sign. It means that the long-term investors are now getting out of the stocks. So let's see if this will continue or we will have some reversal next week. It's very important to watch, but this is not a good sign. Last watch out, if you recall last time we talked about the Hindenburg. I changed this now. The Hindenburg already gave an exit signal, but here we have the VIX going up last week by 23%. This is not a good sign. The normal is to have the VIX around the 15. If it's going up, it means that the fear and the volatility are increasing. If we approach 30, then it means we have a panic selling in the market. And at that point of time, this is the time where you go and buy. You buy when there is a blood on the street, as Warren Buffett was saying. We have already the majority of the companies, the big ones or the important one, announced already. So we still have some companies announcing, but I would say the effect of these companies will not be as much as what we have seen during the last couple of weeks. We need to watch the news on the government shutdown. If the government is back to work, this might be a good news to the market. But there will be a flood of reports that were not happening during the past period, so we need to see the effect of that on the market when they are announced. My trading strategy is that I am watching for the reversal continuation on Monday and next week. If we break below Friday's low, then it's a shorting signal for me. That will be it for this week. If you have any question, please email it to the info@thepersonalfinanceacademy.com. And if you like the video, please like, share it with your friends, subscribe to the channel, and put any question in the comment. This video is for educational purpose only and should not be considered as a financial advice. Any investment you make is at your own risk. Thank you very much.